All right, ladies and gentlemen, I hope you had a wonderful day. Today was one of the craziest Fed days we have had all year, and I know that might sound crazy because today doesn't look like much. We have seen a lot crazier in the past. Even on the daily, we have recovered and got back to where we started that awful week last week, but why was today so crazy? Because we got the return of financial conditions, specifically tighter financial conditions. This was mentioned. It was one of the minor changes in the statement. And if you want to see, even compared to last month's statement, the Fed mentioned credit conditions. They said tighter credit conditions. What they included today was one word: financial. And now related to the conditions, why this is so big, why I'm saying it's the craziest one of the year, because I was searching. You could go see, I had Control F. I went through 2-3 years of the Fed already, but the last time you heard, even in the statement, them mentioning financial conditions, it was January of 2022. And the only thing you'll notice from then is that they were referring to it as accommodative. You even go back December 2021 and all throughout 2021, they were mentioning financial conditions here and there, but overall it was accommodative. So the return of this today, is it important? Yes, it is. But is it going to tell you a lot? Unfortunately, no. Powell had his chance, but even though he brought up these financial conditions, maybe he dodged a bullet by not explaining them too much. Now, is that what I want to talk about? No, the reaction we had today. And I had a very interesting interpretation because at one point I really thought what he was saying was hawkish, but it also seemed like Powell was kind of talking tough. And it makes sense. Powell has the rep to back it all throughout the last 3 years. I mean, think about it. Last time he tried to pull out financial conditions, he didn't have the rep of destroying the bond market and everybody being wrong every time they thought he was going to cut it. So this is what makes it a little interesting, but I felt as if he was fake hawkish. I called it fawkish or fox hawkish, like F-A-U-X-I-S-H. And anyways, but the whole idea is the reaction that we got, I think it is counter to kind of what Powell was saying, and that's why tomorrow, the rest of the week, it's leaving us a very interesting setup, especially since we're getting a little bit more relief since that painful October, and they're already talking about the great November seasonality. So, Chad, it's going to be wild. We're going to talk about the Fed today, what to look for tomorrow, and then I actually have a couple of plays. I made a couple of moves, and you still got some of those earnings tomorrow. So what I need from you, a thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will be live early for the non-farms. If you missed Powell today, man, oh my gosh, it was a lot of fun. It was wild, but run it, baby.
Couch, it's a 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, ladies and gentlemen, before we get into the nitty-gritty of the Fed and what I really want to show you, you have to understand a little bit of context for this morning. We had that Treasury refunding, and remember, everybody was making a big deal about it. They're saying it's more important than the Fed. Even today, I think people talked more about the Treasury refunding than Powell, which is interesting considering you saw your first change on the statement that goes back to like 2022 and 2021. But interestingly enough, the Treasury was actually good. That news about the refunding this morning, sure enough, Yellen decided not to sell the 20-year bonds. They added to all of the other durations, but kind of chilled out, and the market received that as good. And then throughout the day, we had economic data, the ISM, the PMIs. All of that data was softening and kind of data cooling down, but not showing that it's cratering. The market has liked all of that recently, especially with the backdrop of rates and everything else. So we already had a lift to the day, and then we started getting into Powell. So he starts his press conference 12:30, then it's the pre-written statement. Of course, the market just goes up for no reason, and then as we get to the press conference, we start to get some pretty wild reactions. Now, let me just start with the conclusion, and you'll see how I got there, but simply what happened today, this little drop in pop, and even coming into tomorrow, this is why I think it's all going to be so important. My conclusion is this reaction, the market reaction, was not because Powell said anything good. He actually said hawkish things. That's why I'm saying this follow-up with the data and tomorrow, it's going to be very key, because what he was saying, it did not sound good. He brought up financial conditions for the first time, but the way he refused to answer or even give an objective measure, as Michael McKee was asking, it says a lot. But also, remember what just happened now. This has been 2 times in a row of no rate hikes. You have now officially paused. And that's why I'm thinking Powell needs to kind of say a little bit more to make sure the market doesn't get crazy. But I do think in a way this reaction was the market calling Powell's bluff to agree. To a degree, and saying, yeah, he's done raising rates. Now, like I said, that hasn't worked out in the past, but why do I believe that? And this is what I said while we were listening to all of it, because it starts around 12:43 or 2:43 when he's talking. It's literally into these low candles, and I'm glad I wasn't the only one in the world who noticed this. People noted the transcription, and he said right here, he says, Fed staff did not put a recession back into their forecast. That was good news. And then a minute later, he says financial conditions have clearly tightened over time. That will have an effect. We just do not know how quickly that'll be. So he's addressing the financial conditions and just saying, yeah, we don't really know, but clearly there's been something. And then he says we're not thinking about rate cuts at all. He said he's not thinking or talking about rate cuts, and he says they are focused on if they are sufficiently restrictive. And the question the Fed is asking is if they should hike more. That starts to sound, again, you let me know how this all sounds. And then he says we're very focused on getting confident that the Fed has achieved a sufficiently restrictive stance on policy. This is literally by the low candle at 250. Literally that last statement saying that they want to get confident in spending, roughly 7 minutes not answering the question. And then there was a lot of other follow-ups, but the way I took it is that the market could easily see that as, yeah, he's not confident yet, even with this massive move in rates. Maybe he doesn't want to admit it or not, and that's why I'm saying that's why it could be the market calling the bluff, but that's not even the kicker, man, because 2 minutes later, this little rally right here and where it gets crazy, this was because of Nick Timiraos, the Fed whisperer from the Wall Street Journal. Literally, he just asked a question and then makes a tweet responding to his own question he asked Powell. Powell answered, and that was that questionnaire again during this time. And he was asking him even about rates and whether or not every meeting is live. And Powell didn't want to say yes, but he also made sure you didn't rule out the cuts. And then Mr. Timiraos just tweets, he says, to my ear, Powell did little to talk up the projection of one more hike from the median SEP. He said simply they'd submit new projections in December. So not only is this what he always says, but the fact is, it seemed like after that, everybody kind of started piling on to, hey, maybe we kind of call his bluff. And then, yeah, this is dovish. Mentioning financial conditions, this is dovish. And he didn't say things were confident, but he also said what he's always been saying for these last 2 years now. But the difference is he has finally paused, and he's now even talking about financial conditions being weak enough. Clearly, the rates and everything has gotten Powell's attention. So the way I'm looking at all of this in the short run, I think the market could try to call Powell's bluff. If the seasonality kicks in, it could give you a nice little bit amount of movement. But at the same time, like I'm saying, if the data by Friday really wants to flip it, Powell doesn't have to say anything. And if it really gets out of hand, if the market runs up too much, or if people panic off it and it sells off, you probably will hear from Powell very shortly and he'll make it clear. But in the meantime, the data is going to do the speaking for Powell. So don't forget how sensitive we are with all of that stuff. But now this all leads into tomorrow, because I think tomorrow is literally a perfect day to have all of this. Why? Because the calendar, we are not going to get much. Most of the main events, you will get the things overseas. You're going to hear about job cuts and then initial jobless claims. You will get some little data, and we'll see how sensitive the market wants to be, but I really think they're going to focus on Powell majorly, and this is going to give us a nice day to say, hey, can any of these little rallies actually hold up? So like I'm saying, the market calling Powell's bluff, we're going to need things to hold. And one big thing, I've been showing you guys this the last couple of days, and I said it prior, that's the beauty. You could kind of, like I said, hopefully we could use this as a compass or a North Star. But once again, we are below those peaks now. And if the 10-year could really hold down and stay lower, that is overall going to be received as a better sign than not. So that was one of the main things we wanted to look out for tomorrow. I think with a less set of data until after hours, and then with everybody ready to focus on the non-farms and Friday, we're really going to see, with not too much getting in the way, maybe a little bit of data, are we really in that environment where people want to buy it or not? Because even though this has been nice and we've made some progress over the last couple of days, I keep telling you that word progress because 1-2 green days, I mean, we're just getting back up. You know, you're still negative in the bank account more or less when we look at every major asset and the things we want to see cool down. Now, doesn't mean the market can't get ahead and this could be the start of something, but like we're saying, we have an interesting dynamic. In my opinion, I think Powell said some slightly more hawkish things. He's bringing up, he's aware of the market kind of being shaky, but then at the same time, that is always an opportunity for people to press Powell and try to call his bluff because, you know, there is a phrase, when the central banks start panicking, that's when you're good, vice versa on the other end. So we'll see what happens, Chad. Either way, it's going to be wild, but tomorrow we get a great digestion day. Then Friday, non-farms will confirm it. If bond yields and the attitude and sentiment holds up, I think we're really going to find out what's good, but today was definitely a shift in Powell, and we might remember this, especially as the story goes on. So I hope you're ready, but let us get into the plays. So, right off the bat, I told you I have a couple of plays. I did make one after the bell. I'm going to just start with it. Top tick Josh came out today. I top ticked one, but it wasn't a top tick. It was good. This one came down, but now I'm like back to break even. But I grabbed ELF. I grabbed 50 shares at like 103.50 after hours. They killed it on earnings, and they've raised their guidance once again above a lot of the estimates, and I took that as very good. They are overpriced. A lot of cosmetics are doing bad, and this is kind of why I wanted it today, because Estee Lauder did awful. Same space. ELF went down because of it. Now ELF is coming in saying we're killing it. Like we talked about, they have been kind of taking some of that market share. So last time I wanted to buy it, it was at like 135, but I was like, nah, we'll wait a little bit. Then all of the carnage started happening. So even though it was up 10%, started with half of a position I'd be willing to enter with just for a swing trade here. Again, we'll see November, but I was banking on October. I still have a lot of those shares. Some things are coming back up. My Netflix now is almost back to break even, believe it or not. But generally speaking, I still kind of want to see how it plays out, get out, and do my thing. But I did like this play, and I did go for it. So we'll see if it could actually hold up for earnings tomorrow, the post-earnings. But that is play number one. Then play number two. This is part of Top Tick Josh today, but unfortunately, I think it might be too late, but if it goes below my price, then maybe I would get in there. Otherwise, I hope it doesn't, or I hope I sell out before it goes below my price. But essentially, Six Flags, they got a rumor or a news today. It was Wall Street Journal. They said they were apparently offer this week that Cedar Lake, another entertainment thing. It's like Ohio Six Flags. That's what they told me. But they want to buy Six Flags, or there's going to be some sort of merger. They went up on it. We just caught the news super early. I got in 200 shares. It was at 1911? Oh, 1913. I was like, I got in at 1911. I don't know if that's, I got in 1913, 200 shares, and then it rocketed up. I'm still up right now about like 9.7. We hit as high as like 12 or 13%. So still riding that out, kind of down to hold it to the end of the week. If they're saying as early as this week, I mean, we'll find out. And even in volatility, a little arbitrage merger, it could be good, especially if we got a good entry, but we still don't know and need to confirm. And I'm sure we'll get some updates, especially with how it moved today. But that is play number two. Then play number three. I think I have more than 3 plays for you today. NVO. I already have a play in this. My shares are like right back up to break even, or I'm down $1 per share, I believe. Grabbed this a couple weeks ago. Even in the volatility, they didn't drop too much. Now it's right back up. But Eli Lilly, Novo tomorrow. They have earnings in the morning. I am going to take a risk, but I think it's going to move pretty crazy regardless, and I'll show you the next play. This one, you'll have to see, but generally, watch Novo, Ozempic, everything going on. No matter how it moves, I think it's going to move a lot because everybody is still crazy over this, especially Wall Street. And they gave some update today, Novo did, that they are using, I think, Fujifilm to supply or more of the fulfillment for Ozempic. So wild. But that is play number 2 and related to that kind of, but this one is just crazy. Play number 3 is Clorox. This thing dropped 7%. They slashed their guidance. It was awful. And then they rocketed up to up 6. So this move, I mean, you kind of had a moment there. We were watching it all after hours, but it's kind of wild if you pull it out. It went back down to like 2015 prices and then is rocketing up. So I think tomorrow this could be interesting. But you even look at the chart, sometimes this remind me of like October, that just like death wick and then start to rally up. I mean, watch everything and anything in the space, and we'll see how that kind of plays out tomorrow. But I'm going to be watching those, and then obviously Apple for earnings. Don't have a play, but I'm more wanting to see, can we make progress in the market? The first day of digestion, is it going to be, I want to confirm this theory I'm telling you, is it going to be the market calling the bluff, or are we quickly going to kind of see that pressure and rates return and then have to now wait and be at the mercy of the non-farms? But I do think by the end of this week, even Apple tomorrow, we are going to have a lot of answers. And Powell kind of already gave us a little bit now, and welcome to the next 30 days of your rates not going up. That's good news, right? Yeah, but I hope it is, but that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, you got to stay in the game. You know why? Because once this game ends, another one starts. Once this season's over, it quickly begins again. Welcome to the market. And just stay in the game. And let's close out this year. And remember, it's not always about 1 year, 2 year. Make the most of every moment, but also have that long-term goal, Chad. So I love you. I'll see you in the morning. Let's close out this week, see what happens, and horn.